also on earnings watch, and especially out of the consumer related sectors. A lot of people are trying to get a good gauge on which retailers are best equipped to navigate the bumps ahead. Dollar Tree shares in the United States have been under pressure today. It seems the profit outlook is what's disappointing investors. Zhihan Ma covers the company as a senior research analyst in the retail area for Bernstein and joins us now. Great to have you with us. Thanks for your time. I've seen a few different takes on what the market is concerned with. What's your observation of what's happening with Dollar Tree's business?
Yeah, so I think the issue with Dollar Tree is that the stock had a really strong rally coming into the quarter, right? So to a certain extent, the strong beat and to a certain extent, the raise from this morning was already priced into the stock price. And now from here, what people are looking for is how sustainable is this growth momentum from here? And we didn't really get too much confirmation from the company on that front. I think that's why we're seeing some pullback in the stock price so far today. And specifically, if you look at the raise of the full year guidance, top line is raised ahead of consensus expectations. EPS guide is raised, but the implied second half EPS is actually weaker than expected. And there's a number of margin, kind of tariff-related impact on gross margin, tariff-driven reticketing cost weighing on SG&A, et cetera, that are kind of further increasing the cost outlook for the second half. And on top of that, I think it's still pretty uncertain how consumers are going to continue to hold up against the price increases. So far, pretty much all the retailers are saying elasticity has been better than what they expected. And back to school has been fairly strong for most retailers, but we don't know if that necessarily translates into a nice holiday season for everybody. And for Dollar Tree also, and that's part of the reason why they guided in a fairly wide range still for the back half.
And, you know, it was interesting. I was looking at what they were discussing on the conference call, and there seems to be so much commentary from the CEO around figuring out how consumers react to any of those changes in prices as a result of tariffs. I think, you know, Walmart has fielded a lot of the same kinds of questions. As an analyst right now, how much time do you have to spend trying to read through all of that to get a sense on what the pricing strategy is going to be and which retailers can be the most successful?
I think on the pricing side, we have already seen a good chunk of pricing actions from retailers. Now, there's more to come because there's holiday and seasonal goods coming up on shelves. They're very import heavy, so clearly there's going to be more price increases there. But I think a big question is, so far, the consumers are not really backlashing against the price increases. Could it be because consumers are more resilient than what we thought? Maybe. Could it be because people are not fully understanding or fully interpreting the full degree of price increases? That could be another reason. And could it be that inflation overall is still kind of underpacing wage growth right now, but that could change in the back half of the year. And even when real spending power actually starts to decrease, what does that mean for consumers' willingness to absorb the price increases on their end? So I think that's really the biggest wild card from a macro perspective, and that's weighing on a lot of companies' ability to guide and have enough visibility in this environment.
Okay, and so you have a market perform rating, which and you can correct me if this is the wrong way to characterize, but it's to a certain extent, it's a wait and see perspective on what happens with the business from here. You cover a range of retailers, the biggest of the bunch, covering every component of the retail fabric, from buying stuff from your homes to obviously some discount items as well. If you were to give our audience just some general advice on how to think about investing in retail, if they're looking at these stocks for the rest of the year, what would be the biggest thing you'd suggest?
Yeah, I think, again, from a macro perspective, elasticity is probably the biggest uncertainty to watch out for in terms of how consumer behaviors continue to shift into the back half. And within my coverage, right, the reason why I have a market perform on Dollar Tree near term is because I think it's one of the more exposed to macro stocks out there. It's got a bit more discretionary exposure than some of the other retailers I cover. And as a result, you're likely going to see more price actions at a retailer like Dollar Tree, and that could trigger more consumer reaction if and when we do see consumer behaviors turning more south from here. So I think, again, macro-wise, watch consumer behavior, and then within the retail space, if you want to play it safe, go with companies with less macro exposure, less tariff exposure, and in my space, that could be a Dollar General, for example, that's more like a grocery store, versus a Dollar Tree, a Target of the world, tend to be more cyclical, and you're likely going to see more swing factors because of the macro.
Zhihan, thanks very much. Appreciate it. Zhihan Ma from Bernstein covering the Dollar Tree story for us.